I'm Brandon Amoroso, and this is the D2Z podcast, building and growing your business from a Gen Z perspective. Thanks for tuning in to D2Z, a podcast about using the Gen Z mindset to grow your business. I'm Gen Z entrepreneur Brandon Amoroso, founder and CEO of e-commerce agency Electric Marketing. And today I'm talking with Jeremy Horowitz, the director of marketing at e-commerce data leader Daasity, and also the host of the Messenger Mastermind Podcast, which if you haven't checked it out, you absolutely should. It's one of the best ones that I've ever listened to. Jeremy's here to talk with us about how to scale your business and how to coordinate messaging across all of your channels with his vast experience in the e-commerce industry. I'm super pumped to have you on, Jeremy. Thanks for coming on. I'm excited to dive into this with you.
Yeah, I am too. Thanks for having me on. I had a ton of fun on our episode. I considered myself to be an email and SMS wizard, and I was taking notes for your 11 different flows and all the different processes. So got to bring the same energy, got to bring the same performance today, hopefully match that. And yeah, really excited to dive into it and hopefully share a couple of helpful tips that people can deploy in the next couple of weeks.
Awesome. I'm going to use that as a review on my website.
Yeah, feel free to quote testimonial. I got a profile photo I can send over afterwards also.
Awesome. It'll have to be a profile picture with a dog though, as you've seen by our website. That's a requirement.
All right. Well, I'm an aspiring dog dad, so I'll have to send you one of the dogs I eventually hope to have be a parent of.
Sounds like a plan. So why don't we start by giving everybody just a quick background on you, sort of how you got into the industry in the first place and some of the things that you're up to now.
Yeah, definitely. So where my e-com journey started, I mean, personally, probably at like the age of 13, because I have size 14 feet. And back then, Models and all the major players didn't really have shoes that big. So I really had to like walk through the store, find the shoes I wanted, and then go online and have them shipped to my house and like wait 2.5 weeks. So I would say I was a very early power user of e-commerce because of that. How I professionally got into the game was after my second company that I started out of college didn't pan out. I was working at an early stage social media company that was taking on e-commerce clients to kind of pay the bills while we were fundraising and building out the first iteration of our product. And one of my clients there was a company called Lumi, which sold and still sells Kim Kardashian's favorite selfie case. Through a bunch of crazy different things that happened throughout my career, I ended up consulting and then going full time for them, where I ran their Shopify Plus and Amazon business, and then managed a ton of their email and SMS, digital marketing, a bunch of different programs. And I was brought in to scale their e-com D2C presence while the company got into retail locations like Apple, Target, Sprint, Best Buy, Verizon, and a whole host more. From there, that's actually when I started the Messenger Mastermind Podcast. Literally, it was just two buddies who ran a fitness apparel. They still run a fitness apparel brand. At the time, we really just started the podcast because we were having great conversations in Facebook Messenger. We were like, we need to record this and share it out with other people. Left Lumi a couple of years ago, and now I'm the director of marketing at Daasity, where helping brands scale better with data. And my job is to sell that into brands and then actually scale the company and grow, which has been incredible. We're a Shopify Plus certified app, have amazing partnerships with companies like Electric IQ and basically the best of breed tech stack for Shopify. And then now I also started an early stage investment fund where I'm investing in the next generation of social impact brands and technologies. So if it isn't abundantly obvious yet, I'm very deep in the space, and I'm also a huge nerd for this type of stuff.
How much of an impact would you say your like hands-on experience with Lumi with direct to consumer has translated over to now being on the software side and sort of being on the other side of things and selling into brands? Yeah.
So the reason I am at Daasity is because of my experience at Lumi. So I'm not sure exactly how I should position this. A little brief history. So at Lumi, my side hustle there was customer research and data. So I brought in the entire reporting and analytics infrastructure into the company, used multiple tools that would now be considered competitors of Daasity. And I used to just look like a much younger looking, not as haggard man. And I used to I lost a lot of, I have baggier eyes now, I'll put it that way, because of that process. And as I really joined Daasity because the stuff that took me months and tens of thousands of dollars to build at Lumi, and I would say they never really got to, is what at least I really feel very strongly that Daasity offers out of the box. And it's been able to unlock a lot of new features that I really, really wanted as a merchant. So part of the fun of my day job at Daasity is I basically just get to share with everybody. Like, it's kind of like therapy a little bit. It's like I get to share with everybody, like solving my previous problem that I had. And then I love working with brands. So it's really exciting to work with brands who are just getting going and starting to scale up. We work with Shopify Plus's largest brands and who are doing 9-10 figures in revenue a year. And that's also been an incredible learning experience for me. That was a big thing of why I wanted to get back into SaaS, was when you're really deep in a brand, you really have the challenge of, is this my problem or is this a vertical industry greater like market problem? And seeing thousands of businesses that we work with every day, it's really helpful to start to identify those patterns, see the trends, and really understand like, where is the market moving? How does that impact verticals? And how do brands who are sitting on top of that, how does that impact them? And then how can we help them solve those problems?
I can imagine that it probably helps you out with your new venture as well, in terms of sort of what potential companies you're looking at from an investment standpoint, since you have that overview of sort of the entire industries across all of Shopify.
Yeah, I would say that I've structured all three pillars to support each other, and they're all very separate and very different in certain respects, but everything is just data and everything is information, and everything helps funnel how I see things progressing forward.
What would you say in terms of like channel diversity? How does that impact brands today? And also, where does like Daasity fit into that in helping direct to consumer brands?
Yeah, so we're sharing of it, diversity fit into brands. It's really funny because I just feel like I've been preaching this for close to 4 or 5 years now, and it's like it feels like everybody's starting to finally get it. So it feels weird saying this, but 3 years ago, and I can send over links to my podcast where my co-host and I were talking about this. Like, we were screaming at the top of our lungs, don't be so dependent on Facebook, because if something happens and you're so reliant on Facebook, your business implodes. And this is we're recording this in early February, and Facebook is basically accepting the fact that, I think somebody told me this morning that like they heard news that Facebook was basically like, they're blaming their results because their marketers don't want to spend money on Facebook anymore. And I just find that hilarious. Like, if I ran a physical product business and I was upset that people didn't want to buy my sweatshirts anymore, and I'm going to blame my customers for why I decided bad quarter. So channel diversity is such an interesting challenge, because it's something that I think everybody understands that they need to do, but doesn't understand how to do it. And it's really, really difficult. And especially if you're sub 10 million, and especially if you haven't raised VC funding, especially if you really want to grow quickly, it is, from a marketing perspective, the greatest challenge that every brand faces. And it's one of those things that needs to be done so thoughtfully and so well that you really are, I don't want to make it dramatic. You're not like walking a tightrope, but you really are playing a very strategic game where you need to be thoughtful and you need to really track very iteratively and quickly how things are progressing to make quick decisions. And so why I'm very bullish on Daasity and why I joined the team was, at Lumi, we were spending 6-7 figures a month across multiple paid media channels. We had email, SMS, Messenger, push notifications, a Facebook community. We were testing out PR, influencers. Well, we weren't testing influencers. We had major influencers working with the brand. Right, we were doing all these things, and it was an absolute nightmare trying to do what's called true ups at the end of the month. Right, we spent all this money, all of the sales came back. Was budget effective? Yes or no? And as you go and spend in every channel, it becomes so much more complicated because you can't trust any platform's reporting. And I'm sorry for everybody in the industry. I love all the technologies. I think everybody has great tools, but I'll pick on Facebook just because they're an easy villain right now. The problem that everybody's seeing in their Facebook account, if they rely on Facebook for sales, is Facebook has grossly been over-reporting their performance pre-May of 2021. The problem is now is Facebook performance is being underreported in the platform, and it's hard to make a decision. And it's interesting to see the entire market shift from we love it, this is the best, we're sure that there's a little bit of extra here, but it's fine because the cash register is ringing, to it's the end of the days and like this is the worst thing ever. And I just want to make everyone feel very comfortable. Marketing and physical products have existed through like 7 of these cycles. Like we are going to be fine. It's going to be tough. Some brands, a lot of brands will need to adjust. Some brands will need to restructure how they fundamentally build their business. But having the reporting on that to one, understand how things are going and what needs to change is critical, because until you have that single source of truth, there's no common language for your team to have an effective conversation so that you can, on an even playing field, quantify Facebook budget versus email budget versus influencer budget versus PR budget, which are equivocally not the same thing and cannot be measured the same way. The second piece of why I'm so bullish at Daasity is our audiences feature, which essentially allows you to push data into your marketing platform. Why channel diversity is so difficult to actually effectively execute is because you need to talk to, for the most part, I'm going to speak very high level here, you need to speak to the most part, the similar customer segment or a similar customer group across all of these different channels. And each tool has their own way of building how you target those customers. I'm going to leave that very broad because it encompasses everything. Like it comes to ad platforms all the way through email and SMS and everything in between. And so what you really need to do is to really understand your customer from a fundamental research perspective, but then collect as much first and zero party data on them as possible, stream it to as many places as possible so that every marketing and every message and every channel needs to fit that channel and fit that platform and fit a goal of that. But you need to have similar targeting, you need to have similar messaging. Like one of the greatest things that really irks me is I buy something and I buy something, I want to return it within a week. And then for 30 days, I'm getting retargeting ads to buy the product I'm currently returning across Facebook, YouTube, Google, whatever. I am completely aware that everyone's going to be tracking me across the internet and they're collecting my data, and I've written that off. And if Apple wants to fight the good fight, which I don't think it's that benevolent of their perspective, but if everybody wants to fight the good fight, like I understand my data is being tracked. I think for anyone who's tuning into a Gen Z podcast, they're also like okay with it, but I'm not okay with you being tracked and you delivering me some trash message that like is so obvious that like, hey, I know and I understand, like, listen, we integrate with 50 different technologies, all the data lives in different places, and it's hard to do until you have something that centralizes all of it. But as a customer today, their customers are too informed, educated, and understand how the sausage gets made from a marketing perspective that you have to play at that next level.
Yeah, I mean, we've seen before brands get called out on Facebook or whatever it may be within the ad comments from consumers, and they will get very aggressive if they think you're targeting in a way that is ineffective or annoying or whatever the case may be. But to go back to your sort of Facebook was over reporting, now it's under reporting, I think this is something we deal with on a daily basis, given the fact that we're working with all these clients. And it's, for me, the whole like year over year, even month over month comparison model is essentially dead because of how much change there is that has nothing to do with seasonality or anything of the like. So how am I supposed to compare January of this year to January of last year? There's no like rhyme or reason to that. And so I think for brands, it's important to set new sort of baselines and also realistic objectives. You can't continue to use what your Facebook ROAS was 2 years ago as the North Star for today. And there's some brands that have like adjusted and are comfortable with this new sort of environment that we're in. And there's others that aren't. And you're sort of paralyzed by the fact that you're just looking at that on-platform metric and you're like, holy shit, I can't spend any more money whatsoever. But it's just because you don't have the full picture like you guys are able to provide.
Yeah, and I guess when you're doing that year-over-year comparison, what metrics are you using?
So a lot of our brands will like to look at like just revenue as the true North Star. So comparing January of this year's revenue to January of last year's revenue. And sort of the way I approach it is there's so many different factors at play from sort of a macro perspective, where January was the height of lockdowns again. And so how are you supposed to compare this January to last January when e-commerce volume across the board was just through the roof? It's not apples to apples for me, it doesn't feel like.
Yeah. And I mean, everything in the past 2 years, I don't think we're even looking at the same. I don't think we're looking at just fruit anymore. Like stuff has changed so dramatically that it's hard to compare. I think it's going to be a natural trap if you rely on in-platform revenue numbers because, well, one, the iOS changes have just completely broken how that fundamentally works from a technical perspective. But two, when you go and do the math, and this is actually what started my data journey, was we would go and we would pull out Facebook reported revenue and Google reported revenue and Klaviyo reported revenue and everyone else in our tech stack.
Oh, like $1 trillion company.
Yeah. And somehow we were at 150% of sales of what we saw in Shopify. And then when we actually like ran the P&L numbers, it wasn't like, it was just like really, really far off, and profit was a much bigger delta that our finance team wasn't as happy with our performance as we were. And I'll leave it at that. So this is a bit of a diatribe for me, but I think it's so important that I think it's criminal that marketers aren't trusted with financial level data for the company. And I don't mean like, what is the cash balance in the bank account? I mean like fundamental unit economics. Like if you go pitch a VC or a private equity company, when you exit, they're going to ask you what your fundamental unit economics are. And considering that founders and early stage employees, I will always, from someone who writes checks currently, I will always consider a founder and early stage employee a way bigger investment in any brand than any investor. Like I understand that there are much bigger investors in the space and they have the way that they play. But I founded, I think 4 or 5 companies at this point in my career. Like if you found a company, you are the greatest investor in your business. And I think it's criminal that so many brands aren't informed, don't know about their unit economics until they have to go raise money. And because like, if you think about it, if the people who do this professionally are using this as the litmus test for how to measure the impact of your brand, everyone should be. And I know this seems like a tangent, but understanding this actually solves the how do we get around the in-platform reporting problem.
For those that are listening that aren't familiar with unit economics, can you just give them like a brief high-level overview of it?
Yeah, sure. And this is going to be extremely high level. I am not a lawyer, tax advisor. This is not financial or legal advice. This is just high level how I think about things. So at a high level, your unit economics are going to be, we're looking at really 3 core things that are understanding the health of the business. And then it helps you build out specific metrics to understand your marketing efficiency and growth. So the first one is just your top line sales minus your product costs, right? So this is just gross margin. This is the classic, like how much can we sell and how much can we make? And sorry, actually it's net sales. So think top line sales minus discounts, refunds, returns, minus product costs. And your product costs should really be landed costs, which include everything from the cost to getting something out of your factory into your warehouse. And then you just don't include shipping, the cost of shipping the products to customer. That's typically not included in landed costs, right? So we have how much we sold minus all of the discount, refunds, and returns, basically cash back out immediately. Then the product costs to actually get the product out. That's our gross margin. What's really important is to get to your contribution margin. So that's going to be your gross margin minus your CAC, CPA, whatever you want to consider the cost to acquire a customer. There's many different ways to calculate this. You should talk to your finance team or work with a financial specialist to determine what yours needs to be. But right, basically from there, you understand, we already know how expensive it is for us to produce a product. Now we understand how expensive it is for us to sell a product as well. And basically what you want to do from here is work with your finance team, and they should be able to know what your cash flow is to set boundaries of what all of those things needs to be, right? A business with a 20% gross margin versus a 50% gross margin is going to have a way different CAC that they can spend to acquire a customer. And that's from a percentage and a volume, like how many dollars are all of your line items. And so once you really understand that fundamentally, and every paid media agency that I've ever worked with, and I think why we work so well together, is as soon as somebody asks what's your budget, what's your growth goals, they're going to ask back, what can we actually spend and what margin do you actually want to make on those products? Because at the end of the game, let's be honest, how much margin you make on your contribution margin is the game, because then that's what allows you to buy more inventory, hire team, pay for tools. So once we have this fundamental framework laid out, we can set what that CAC, CPA, however your team needs to break it out, what that is. And instead of looking at measurements like ROAS and top line sales, you can look at, okay, this is our CPA. What is the budget we have to spend on marketing? And now let's forecast out how much we think we can sell. And you usually create some sort of range of what your CAC is. And the balance that the marketing team should be pushing the founder's internal finance team to understand is, how is our gross margin fluctuating based on our net sales, so including those discounts and refunds? And then what is that CAC, and how is the CAC fluctuating by all the changes in the platform? Once you have that fundamental understanding, you can go, okay, we have a $5,000, $50,000, $500,000 budget. Our CAC is roughly X. So we're going to project this many new customers acquired, this many sales, and that revenue. And it's by no means a perfect way to build a forecast, but it will give you a much more accurate, it'll empower your team to have much more accurate process to actually go execute a plan. And so instead of saying, hey, I want you to we want to hit $100,000 in sales for the month. Here's a $33,000 budget. Go hit a 3x ROAS. Well, the problem is that you don't know if they're just going to discount the crap out of your entire catalog to hit the conversion rate that they need to hit the 3x ROAS to drive $100,000 in sales. And I have the battle scars to prove I've learned this lesson. You can make no profit or little. You can make a lot. I'll put it this way: you can make a lot less profit hitting all of those numbers than you want to, because it's not the right information that you're looking for. And I understand that ROAS is really easy to understand, and it's I spend X, I get this in return. But in e-commerce, e-commerce is not SaaS businesses. The margins and the how you deal with that are a much more defined parameters, and really understanding at least that fundamental at a high level can change how you fundamentally structure everything, which will allow you to way open it up. Because in the same respect, why limit your sales to only $100,000 if we can go spend that $33,000 and generate way more money at an acceptable CAC or CPA?
How would you say for a brand that's under 10 million to get started with some of these things? Because I know you mentioned channel diversity is very difficult for somebody who's under 10 million in GMV. What are some tactical approaches that startups can take to make sure that they're setting themselves up for success in today's day and age?
Yeah, so I actually spend most of my time helping brands get from 0 to 1 million, 1 million to 5, and 5 to 10. So, that's how I like to think about it. That's how I break it out. I think to get from 0 to 1 million, you probably just need to really, really scale aggressively one channel. You're probably realistically, how small your team is, how limited your resources are, you probably do need the focus of I would call it one acquisition, one retention channel. And the retention channel really is honestly a support to acquisition. So back in my day when I was doing this, it was Facebook first, and then it became Instagram against email. Now I'm really starting to think that it's going to be TikTok against SMS or YouTube against SMS, maybe email, depending on the brand customer-based category. And you really just need to figure out what hits, test a bunch of stuff, really get in deep, scale up aggressively from 1 to 5.
Do you pick the platform and then go into it? Or is there any sort of preliminary testing that you'd suggest to try and figure out what is that top of funnel platform that you're going to use?
Oh, okay. That's a fundamentally different question. Okay. So if you're just starting out and you don't know what platform will work, you need to go everywhere that your customer is. So we're not spending money at this point unless you're super confident that you know that a channel will work. And this usually comes from a repeat team or someone who's been in the industry that launches a brand, and they're like, I know this channel really well, and I know that I can position this product on it really well. If you haven't found that channel product fit yet, you just need to go everywhere that your customer is and just try to convince everybody that you know to buy the product. And so, Reddit and Quora forums, talking to customers, Facebook groups, posting a lot on social media. If you're in that early stage, my recommendation to everybody who's in that spot is become an influencer, thought leader, expert in your space on an organic platform first. That should actually drive your initial sales. And then it's figuring out, okay, if I'm a TikTok influencer, do I just run TikTok ads, or do we need to diversify into another channel? And that's a very iterative process where it's always interesting. Every cycle of marketing is test a bunch of stuff, prune it all out, scale 1 to 2 things, hit that level of success, test a bunch of stuff, prune it all out, invest in the next level of thing. And that's why it's so tough to scale the channel diversity side of this. Is I feel like people are going to listen to this episode and be like, oh my God, I got to diversify and go do 6 channels. It's like, no, if you're on 1, get to 2. If you're on 2, get to 3 to 4. If you're on 4, then you can really start to think about how you scale this out. But if you're really spending and really aggressively marketing on 4 channels, you're probably closer to that 10 million stage. And I guess that's kind of the philosophy of how I would work at it from 1 to 5 and then 5 to 10, right? Is once you've really figured out that channel product fit, you can drive repeatable sales. You can really start to somewhat predict out and forecast your budget. Then you need to figure out, okay, what's the second channel? And this is honestly the most important decision I see for most brands. And the fatal mistake I see most brands make is they go, okay, we had influencers or affiliate or Facebook or TikTok or whatever really pop as our first channel. This other channel I've heard a bunch of my friends' businesses start in, and it's going well. So I should just jump into that because it's hot. And that could not, I understand, and I've made this mistake, so I understand, like I literally got a nice battle score right here to prove it. I know it's easy to think that way, but you really need to thoughtfully think through, especially because the toughest decision you're going to make in that early stage is how do you split your budget? And so as you think about that, you really have to introduce a channel that will support your primary, but then has the potential to outgrow it later. And this is honestly mostly gut and intuition and a little bit of data. And then you need to rapidly get data in and feedback in to validate that, because you cannot spend a lot of your budget, or you can't break out a lot of your budget that could be plowed back into your most successful one.
Yeah.
Something that isn't going to pan out over 6 months. And
well,
so
I see
you
this.
really need to be thoughtful about that.
I see the same thing even with organic social. We'll start working with like a startup or an early stage company, and they've got 7 different social media handles. And it's sort of like, what do you do with all 7 of those? Like, are you creating individual content for each one? Like, are you a thought leader on any of them? And it's really, the answer is usually, oh, well, we take the same content and we just throw it across all 7 channels and hope that something sticks. I think you need to take the same approach for organic social as well. Pick 1, maybe 2, and go all in on that. And then once you have that audience there, then you can start to expand, just like you would on the paid acquisition side of things.
Yeah, exactly. And it's the exact same thing on retention. Like you're not going to send an email, an SMS, direct mail, mobile app. Like you're not going to start with all of that. You need to like strategically think through piece by piece how you layer it in. And then, I mean, I've seen everything where email was generating 20% of a brand's revenue on a monthly basis. SMS was added in as that support channel. And then over 2 years, SMS drove more revenue on a monthly basis despite both channels growing. And now the brand focuses on SMS over email, and they're like changed their model around that. That happened over a long period of time though, and that happened with massive testing and investment. And so it's really important that you have that quick feedback loop where you should always be reading through what your customers say and customer feedback in those pieces. And then you have the hard data to back it up and give context to, okay, this is what we're seeing. This is what we think is next. Because how quickly you can grow and really how profitably you can grow is all based on that cycle, right? How quickly can we test something? How quickly can we see results? How quickly can we prune what doesn't work? And then how quickly can we do it again with more money and more budget? And that's the same way you launch products I'm oversimplifying that a little bit, but it's a similar philosophy of how you launch products. And the fastest growing brands, the brands that are doing hundreds of millions, billions of dollars in revenue every year, understand the cycles of their marketing distribution against their products. And they really know their numbers to say, we can confidently go aggressively in this channel with this product, with this. We're going to test a bunch of messaging, but we're going to take this and push it down our funnel. And I mean, it's just incredible how you can see a company like Caraway Home, who became a darling for cookware, launch a bakeware line and do it so well, where they just really thought through the product introduction, but then pushed a new product through their distribution channels at a different price point, at a different margin structure, and it really take off for them and be pretty successful. And so that's how it's a massive web, But the one thing I want to distill, especially for anybody who's in the early stages, is you don't build the web at once. You build it block by block, and you just keep stacking it up until it becomes really big and complex. And as it gets more complex, you just need to be more sophisticated in how you manage it all.
That makes sense. It's definitely, for me, I think it's honing in on an area or two that you're really strong at, doubling down on that. And then, like you said, just being iterative and adding on to it, as opposed to, I feel like there's some in sort of progression towards, oh, we need every shiny object right from the get-go, when that will just sort of kill a brand from the start because you're just overwhelmed. It's like having a sports car in your driveway and that's stick shift and you don't know how to drive stick shift, I guess. So you need to start slow and then scale up as you grow over time.
Yeah, and the speed at which you scale is just a function actually of how much you can focus on one thing and make it really successful. I think that's also a very counterintuitive realization, that when you're just starting out or you're doing this for the first couple of times, you don't really understand, is you think like, I need to scale up and I need to do all of these things. I know this kind of sounds, I'm arguing against my point earlier, but it's just at different stages of where you are. It's extreme focus, and then you get more resources that you can dedicate to more things. And then those resources should be extremely focused. And then it just branches out from there.
And I don't think there's ever been a better time to be a marketer with tools like yourself at Daasity and just the general like Shopify ecosystem. I don't think there's probably ever been a time where marketers have more access to this amount of data to make informed decisions and to really create some very cool and personalized experiences, both pre-purchase and post-purchase retention, just because you have so much at your fingertips, because you have these unique tools that are now like aggregating data from a variety of sources and allowing you to make like really well-informed sort of marketing pushes based off of that.
Yeah, I 100% agree. And also from seeing the technologies that are just starting to bubble up and what's next. I know things kind of look doom and gloom. They've looked kind of doom and gloom for a little bit. It's not, we're just going through a basic restructuring. This is the same thing as like an economic correction. We're going through a marketing correction in this space right now. But yeah, I'm so excited. I'm seeing direct mail make a huge comeback, and brands seeing a ton of success with that. I think connected TV is actually about to be the next frontier. I'm sure there's a technology or something that I can't even think of yet, but is going to like reinvent the game. Also, like just seeing all of these things play out and seeing how many people can get in, how many new business ideas there is. Like we are still so incredibly early in this game that it's, like the next 10 years, we're going to be looking back and it's like, oh, that was cute. We used to think that was hard and like that was complicated. We're going to be doing all of these cool new things, and it's just going to take a different shape, but the same fundamentals still apply. People want to buy stuff to make them feel good about themselves or serve a specific purpose. And there will be plenty of businesses that will be there to support it. And everything else is honestly just the fun of the game of figuring out how to connect those two things.
I couldn't agree more. I think that's why I love this industry. It's so fast. There's always something new every day, every week. It definitely keeps you on your toes.
Definitely. Yeah. And honestly, like if you have questions, I'm always happy to answer them. I hope some of this has been helpful. I'm sure I ranted a lot. But yeah. Brandon,
thanks for joining us. Where can people find you online if they want to get in touch?
Yeah, so probably easiest place to find me is LinkedIn, Jeremy Horowitz, Horowitz. I try to post one helpful ecom related thing a day there. And then if you want to learn more about Daasity, daasity.com. And Messenger Mastermind Podcast is across YouTube and all the major podcast platforms.
Awesome. Well, thank you so much for joining us. We'll have to do this again. I'd love to dive a little deeper on all of the topics that we discussed today. So we'll definitely need to do it again another time. Again, Jeremy Horowitz, you can find him on LinkedIn or at daasity.com, daasity.com. I hope I spelled that right. I think I did. And then I'm Brandon Amoroso. You can find me at brandonamoroso.com or Electric Marketing or LinkedIn as well. Thank you all for listening in, and we'll see you next time.